It's been almost 2 decades since we started our journey to educate and help you take action so you may better manage your financial future. Our goal is to help you accomplish your life's purpose. This podcast reveals financial tips, strategies, and insights that will help you to set your financial goals and guide you along the way. This is Managing Your Financial Future, brought to you by the advisors at Lucia Capital Group. Oh, thank you, me, for introducing me. And I am Johnny Dean, your podcast host. Welcome back to yet another episode. I just counted again. Professor Rick Plum are with me here. Episode number 125. Episode 125.
Doing pretty good.
It's not bad. I mean, they said it wouldn't last more than 10 episodes, and look at us, right? I'm kidding. Nobody really said that. But, you know, when you start a podcast, you start it with the best of intentions. You say, hey, we'll be lucky if this goes, you know, maybe 15, 20 episodes. Is anybody going to like it? My gosh. I mean, here we are, 125 episodes in. We got, how many subscribers just since the first of the year? We thank everybody for listening, especially those regular listeners.
We're on different systems now, too, right?
Yes, and part of that is, I think since the first of the year, we're on Apple.
Right, not just
iTunes,
Spotify,
whatever
Apple.
Whatever, yeah. I don't know, something changed.
I say that like I know what I'm talking about, which I don't.
I should know what I'm talking about. But anyway.
Like us there, though. When you're listening to it, like it so that you'll get them downloaded automatically.
Won't you please like us? Subscribe to us.
They like us. They really like us.
They love us. That's right.
How many different references can we throw in there?
Well, people who listen to us know we make old movie references all the time, which is or TV shows. But this, not to digress, but we do every once in a while. I wanted to talk about something that has not been talked about for quite a while on this program, and for whatever reason, we've just gotten a few questions on this over the last couple of weeks or months, maybe not last couple of weeks, and I said we would address it. And I think you've even talked to a few clients about this.
Talked to a few people who are looking to retire. I've talked to some people who got married later in life and are wondering about benefits and the coordination of benefits and things of that nature and how it works.
Yeah. So this has to do with Social Security benefits. I was going through some of the questions on Social Security. And there were 3 questions that popped up that I look back. We haven't talked about this for well over a year and a half. So I wanted to bring this up again. So I'm going to bring you these 3 questions, and we're going to address them individually. And the first one is, can I work and still collect a Social Security benefit? That's the first one.
That's actually a fairly common question.
Yes. We'll get to that. And the second question will be, can my kids collect a Social Security benefit? Because doggone it, I heard it's a retirement benefit.
Well, when your kids get to retirement age.
That's right. 60 years from now or whatever it is. And then the third question, which is really one that we get a lot. Can my ex-spouse really collect a Social Security benefit from my work record? And the subtext is, I cannot stand him or her, and
I don't want them getting a dime from my work record.
What can I do? So, okay, we'll talk about that. Let's start with the first one, though, which is probably the most universal, and that is, can I work and still collect a Social Security benefit, Professor Plum?
And this one gets confused a lot with the taxability of Social Security. And the reality is there are obviously 2 different things. One is there is a retirement earnings test for anybody who is under full retirement age. So understanding your full retirement age is important because it is changing. It was 66 for a long time, and then the last couple of years it started to increase to 66 and 2 months, 66 and 4 months, and for people getting into their 66 age zone, their full retirement age is changing, and it's based on your year of birth. And if you were born in 1960 or later, your full retirement age is 67. If you were born between 55 and 59, it's a 66 and 2 months, 66 and 4 months.
Somewhere in the age of
it goes up every 2 months for every year in that area. So you have to know what your full retirement age is. And once you reach your full retirement age, there is no limit on your earnings with respect to Social Security as far as receiving your Social Security benefit. You can be making $1 million a year from your self-employment, from your wages, whatever the case may be. If you're 67 years of age or older, you will not have to worry about losing your Social Security benefit. Now, the benefit you receive will be taxable, up to 85% of it, but you're not going to have to give any of it back. And that's where people run into an issue where I was just talking with a couple recently, and the spouse has been a caregiver for the last several years. And so they have not been receiving an income. They've been taking care of parents. And now they're looking to, unfortunately, the parents are probably not going to be with us much longer.
Right.
And so they're looking to go back to work, but they also would like to have some income. And so they're thinking about, they just turned 62. They're thinking about taking Social Security now. And then if something happens to mom and dad in the next couple of years, then go back to work. Well, and the issue is if something happened to mom and dad in the next year or two, and they go back to work and they're receiving their Social Security benefit, they will end up having to give the money back, the Social Security benefit back, once they start working.
So the idea is that Social Security is supposed to be a retirement benefit for people who are no longer working. And I think this is the idea. And if you continue to work while you're receiving a Social Security benefit, they say, well, you're really not retired, so why are we giving this to you? But
they have put levels of cash flow in income, wages, self-employment income to determine whether you're actually employed or not. I mean, and so if you are receiving your Social Security benefit and you're under full retirement age for every month of the year, you do have the ability to make some money, but you just can't be making very much. The number is in the $21,000 to $22,000 a year range. So if you're making more than $21,660 or something of that nature, and you're receiving Social Security benefits, they're going to look at that and say, well, you are not eligible for your entire Social Security benefit. How much of that benefit you're entitled to depends on how much money you make, earnings, wages. So when you look at how much your wages are or your net self-employment profit from work, they're going to say if you're over the threshold, just for ease of math, let's just say it's 21. It's more than 21. It's between 21 and 22 this year. It goes up a little bit every year. They're going to take away, they're going to require you to pay back 50 cents on the dollar for every dollar you're over the threshold. So if you're at 31,000 and the threshold was 21,000, you're 10,000 over, you owe them back $5,000.
$5,000 of your Social Security you have to pay back.
Right. And the problem with it is they don't, unless you go into them up front and say, I'm still working or I'm going back to work, so don't pay me the benefit. They don't find out that you're working until they match up your tax return with your Social Security a year or two after the fact. And so you've been receiving your Social Security for 2 years, and now they want it back. And so they say, send me a check. You're getting $1,500 a month, $18,000 a year. You weren't eligible for it for those 2 years that you were working. We want a check for $36,000.
Whoa.
And so if you don't have the money, what they'll do is they'll say, once you are eligible, full retirement age or older, or you actually do stop working, we'll start paying your Social Security benefit to you again, but we're not going to pay it to you. We're going to pay it to ourselves until you pay us back. And so when you really do need the money after you do really, really retire, then you're going to have to pay it back.
Yeah.
Now, the good news is that when we take a Social Security benefit early, we take a reduced benefit. It's reduced for every month prior to your full retirement age that you take it. If I'm working and I give up, I have to give it back, they're going to treat it as not taking it early for that month or for however many months you have to pay it back. So when you do start receiving it later, it will be a larger number because they're not going to say, well, you started early, even though you had to pay us back, we're going to keep you reduced forever. So it's just a matter of when you're looking to retire and you're looking at age 62 and saying, wow, I made it. I'm 62. I can apply for Social Security. I want to get this stuff before the world comes to an end. And you don't think about the fact that you're still working. Yeah. Now, when you do apply, they're going to ask you, are you still working?
Yes.
But some people will try to get around it by, oh, no, not really working. Or they forget that they're working.
They're lying?
And more often what I see are people who retire, start, receiving their Social Security benefit, 62, 63, and then find out that they need something to do. And they go back to work.
Yeah. Okay.
And they're making, they're not making the 150, 200, 500,000 they were before. They're making 40, 50, 60,000. And so to them, they're not making very much compared to what they were, but they're going to have to give back that Social Security benefit that they had received.
The key point of that is that they are under full retirement age. And I want to just stress that because what you said at the beginning was that if you are over full retirement age, you can work
You can make
full-time,
anything you
80
want.
hours a week and make $500,000 a year and still collect your Social Security benefit. The issue of paying it back comes from people who are under full retirement age for, let's say, for the entire
year.
For the entire year.
That $21,000 to $22,000 threshold I talked about is different in the year you reach your full retirement age.
Yeah. So if my full retirement, my full retirement age is 67. Okay.
Right.
So if I were 63 and I'm collecting my Social Security benefit, and I have been for a year, and I decided at age 63, which is 4 years below my retirement, full retirement age, and I say I'm going to go back to work, and I decide to go back to work, and I do, and I make $50,000 a year,
Yep.
say, let's say that the threshold is $21,000.
All right.
All right.
And you made 51, so you're
And I made
30,000
51,
over.
so I made 30. Yeah, so I'm $30,000 over. So now they are going to ask for it back at some point.
In a
I
couple
have to
years, when they
give back
match up.
any Social Security benefits that I receive. I'm going to have to pay back. So in my case, in this example, I was $30,000 over the allowed amount that a retired person can make and not have to give it back. $30,000 over, I have to give back $15,000.
Yeah, if your Social Security benefit that you received was $15,000 or more, you have to give back 15 of it.
Yes, and if I didn't make 15, they're going to take it all.
Now, this is often confused with the taxability, and I think the coordination or the discorrelation, or whatever, we hear this a lot, that once I get to age 70, my Social Security is not taxed.
Yeah.
Well, that's not true. Your Social Security has nothing to do, the taxability of Social Security has nothing to do with age. But prior to 2000, it's been a few years now, there was the earnings test went all the way to 70. So once you got to 70, then you could earn any amount of money and not have it taken away from you as an earnings test. The earnings test used to be set all the way to 70. Then they dropped it. I think it was 2002. They dropped it down to just full retirement age. But I think that's where the misunderstanding of, well, once I get to age 70, I'm not going to be taxed. No, once you get to age 70, you're not going to have a retirement earnings test. The taxability of Social Security knows no age. Anybody who is receiving a Social Security benefit at any age
can potentially have them taxed.
And this goes into the next question is, can your kids get Social Security? If your kids have a job, they could run into the retirement earnings test.
Well, let's
if your kids have other income from any other source, not necessarily wages, interest, dividends, other things, they could pay taxes on their Social Security. So all these rules blend together, and you have to understand, which rule are we talking about? In this case, we were talking about the retirement earnings test. Are you eligible? Now, disability has its own set of rules, which are a little bit
we'll leave
tighter.
that alone for today. But
Every other benefit, spousal benefit, family benefit, kid benefit, parental benefit, whatever benefit you want that's coming from Social Security, widow's benefit, widower's benefit, that's coming from Social Security that's not a disability benefit, has an earnings test.
Yeah.
Up until you hit full retirement age.
Yeah. So just know, if you're under full retirement age, know your full retirement age. If you are under that, you are going to potentially have to give back some or all of your Social Security benefits if you are working and earning wages.
And work is easy. It's W-2 income or net self-employment income.
Piece of cake, right?
Yeah, it's not IRA distributions. It's not pensions. Well, my pension I'm getting from work, the work I used to do, no, that doesn't count. It's not current work.
No, it's wages is what it is.
Your current W-2, Social Security wages.
Exactly. So that answers that question. It is, as you said, misunderstood quite a bit, and some people are taken by surprise when they get a letter saying, oh, remember the Social Security benefit a couple years? We just found out you were working back then, and so we'd like a check for, $20,000.
Well, for one thing, we're stopping paying you the benefit, and you owe us back the money you've already received, and we'll take a check.
Yes. Well, at that point,
direct deposit works.
At that point, you might say, but I was a year. I worked for a year, and now I'm not working anymore. I need my benefit, and you're going to have to fight it out. Yeah. It's a little bit of a hassle, but just know this.
Usually, it takes more than a year for them to catch you.
Yeah, and if you plan on going back to work, maybe as you said, call the Social Security office.
Find out what it takes to stop the benefit.
Stop my benefit. I'm going back to work, or I suppose you could continue to collect it, put it off to the side. right?
Well, and now that makes me, for a long time, it didn't make any sense for the
But
hassle.
now you can
But
earn
now
some.
you can actually earn something on the bank that you put the money into.
That's true. So if you know they're going to ask for it back, you just don't spend it.
Just
Put it off to the
Create
side.
a separate bank account.
Put it in a CD or something,
Yeah,
or
and earn that 3 or 4% that's
There you
currently
go.
being paid, and then pay back, because they're not going to ask for it back with interest.
no, they just want
They just want the principal back.
Yeah, yeah. All right, so that's how that works.
Oh, planning strategy number 4 or 5.
Wow. We've got the other question that you just started to answer, and that was, can my kids collect a benefit? Now, here's something that also a lot of people don't realize. It doesn't pertain to everybody, but there are situations where kids can receive a Social Security benefit based on your work record. Professor Plum, let's explain how that works.
Well, most people know that if, unfortunately, you pass away and you have younger kids under the age of 18, those kids are eligible for a survivor benefit. But not everybody knows that if they have kids later in life, or they adopt kids, whatever the case may be, later in life, and they start receiving a retirement benefit, their kids potentially could, if their kids are still under the age of 18 or disabled, could potentially be receiving a family benefit being paid for them, basically to help you care for them.
So there's a family benefit. We've heard about retirement benefits. We've heard about disability benefits. We've heard about widows benefits. We've heard
Survivor
about
benefit.
survivor. We've talked about spousal benefits. But there's another category called family benefits.
I'm not. Now I'm trying
I
to
don't know if
remember
it's called
exactly
that.
what Social Security calls it, but it's basically, to me, it's a family
It's
benefit.
a family benefit.
It's for children who have parents who are receiving Social Security. Why are they receiving Social Security? Either they're retired, which means the parents are 62 or older, or they're disabled.
Mhm.
Yeah, and then if your parent is receiving a benefit, or if you are receiving a benefit and you are a parent of somebody under the age of 18, that child under the age of 18 could be receiving a benefit as well. And it's, basically those are the requirements.
They have to be under the age of 18.
Under
is
the
that
or
correct?
disabled. If the
Well,
child
yeah,
is
we'll
disabled.
we'll leave the disability off. Not that it's not important, but it creates a whole new set of rules that I don't want to necessarily.
But if the parent is receiving a Social Security disability benefit,
Well,
then the
then-
child can be getting a benefit as well.
All right, so how does this work? The parent has to already be receiving a benefit,
Right.
as you
If
said.
the parent is receiving a retirement or disability benefit, then then they can apply for a child's benefit.
If the child is under age 18.
18.
Yeah.
They will continue to receive it up until they turn 18 or graduate high school, or whichever is later, but no later than age 19.
Yeah. So
if
don't keep your kid.
Yeah, don't have them keep holding your kid back in 11th grade until they're 27. Yeah, it doesn't.
Kid,
Just for
you know
Social
what?
Security.
Can you please fail these 2 classes? I could really use the money.
Yeah, we need the money for another year.
Yeah, it doesn't work that way.
But and the benefits paid, and it's paid to the parent, although it's taxed to the child, which means it probably isn't going to be taxed because the child probably doesn't have any other income.
Taxed at the child's income tax level.
Right, or
if
or
they
not
have
taxed.
one. Well, if the kid isn't even working, I mean, if all
Right.
they're getting is a benefit, they don't file a tax return.
And the benefit is equal to 50% of the worker's full retirement age benefit. So if,
All right.
if the worker had a $2,000 full retirement age benefit, but they started at 62 because they wanted early, and they're only receiving $1,500, give or take.
Yeah.
The child's benefit is not half of the $1,500; it's half of the $2,000, the full retirement age benefit.
Okay, so let's
So they'd get $1,000.
Now let's get into
if
multiple
you've got,
kids.
If you've got a prolific family, you've got 42 different kids. Now they're not all going to get 50%. Your benefit,
42.
I'm just making numbers up. Your benefit is your benefit. They'll never reduce your benefit because of what's called the family maximum. But if there is a family maximum that will be paid out based on your work record. So if you've got 4, 5, 6 kids, they're not all going to get that 1,000 I used in my last example. They're going to look at what's the difference between, what's the family maximum less your benefit divided by how many people are receiving a benefit in your family.
Yeah.
Now, the mother of the children can also receive a benefit. So there could be, if you have
The spouse.
the
We'll
spouse.
say it could be your
the
spouse.
spouse.
Yes.
The spouse could be receiving a benefit too, equal to 50% in this case.
But is it all subject to
That's
the family?
all part of the family maximum.
Yeah.
And the spouse can only receive the benefit until the youngest child turns 16. So the spouse comes off the benefit earlier than the kids come off the benefit. So the spouse gets it as long as there's a child of the disabled, of the retiree, until they're 16. The kids get it until they're 18, or graduate high school, 19 at the latest.
Wow. And as you said, the family
Subject to
maximum,
the family maximum
is going to
if you have multiple kids, 3-4 kids, and you're getting hit by the family maximum, when the first kid hits age 18 and drops off, then they recalculate the family they don't recalculate the family maximum. They recalculate the individual benefits to each person subject to the family maximum until enough kids fall off of it that they hit their individual maximums.
So are these benefits, I mean, are these benefits paid to the kids? I mean, if you have a 5-year-old, they're not going to have a bank account.
It's paid to the parent.
So, but it's notated
for
as
the benefit of the kid.
Right. So, but the parent,
it's basically to help care for, shelter and
So if this is going to a 16-year-old kid, the 16-year-old kid can't say, hey, Dad, where's my money, dude? Because I just, I got $1,000, right, every month. I mean, that's a pretty good imitation of it.
A surfer, dude, for somebody who was never a surfer.
That's my Spicoli right there. No.
And that's why you're not making millions in the movies.
Just couldn't do it. But this goes to the parent for the care of the child. Do they look to see that your parent isn't spending it on, riotous living and vacations and all that?
I have not run into that very much. Not the riotous living part, but the how they account for it. And I just haven't run into. I can't answer that.
Okay, all right. I don't know. But just it is paid to the parent.
But it is paid to the kid in the event of a death. Now, if you have a child, if a parent dies, and the child is under age 18, they're eligible for a family, survivor benefit, and that benefit is 75% of the worker's primary insurance amount. Full retirement age.
That if?
But obviously, it's not paid to the dad or the mom who just died. It's paid,
But is that if the mom or dad was already receiving the benefit?
No, it has nothing to do with that.
Oh, so that's just
because there's a lot of people that unfortunately pass away in their 40s, 30s, 40s, 50s, before they get to retirement age. They've worked, they've been paying into Social Security. You don't have to have 35 years of service to get for your family to get a survivor benefit.
Yeah.
I mean, obviously, if you died at 28, there was no way for you to get 35 years of work record to get a survivor. There is a number of years to be currently insured for that. But
okay, all right.
But they would get a benefit equal to 75%. The surviving spouse caring for a child would be eligible to get a benefit of 75% at that level.
Okay.
Subject to the family maximum.
Sure. Okay. So
subject to the retirement earnings test,
and
subject to the taxability if you have other income.
All of that. Now, which you don't necessarily have to worry about if a kid's under 18, but who knows? And it continues until age 18. So let's move to the third question now, which is the one that a lot of people really, really.
Well, just step back a little bit. A lot of times when we have people who are getting ready to retire, they're looking at it looks like if we wait until age 70, our benefit goes up by 8% a year.
Right.
So I kind of want to wait for that age 70 benefit. But if I apply now, my 14-year-old, 15-year-old kid will get a benefit for 3 or 4 years. And so does that offset me waiting?
That's true. Yeah.
And so when you have kids that are dependent and you're looking at retirement, taking the benefit early could be something that actually makes some sense and not waiting until 70. It's a matter of dollars in, dollars out. I'm getting reduced, or I'm not getting as much of an enhanced benefit because I'm taking it at 65 instead of waiting until 70. But I'm getting mine. Plus, I've got 2 kids that are getting basically another benefit equal to mine for however many years. Now, if it's only 3 months, probably not a big deal. But if the kids are younger, 12, 13, 14.
There's a few years in there.
And I know some people who have had kids later in life, and their kids are 10, 11, 12 when they're 62. And so the kid would receive it for 6, 7, 8 years. Of benefits. That pays quite a bit going forward, and it really offsets the advantage or the potential advantage of waiting until age 70 to take your benefit.
That's interesting. All these different scenarios that come up. All right, so good point, by the way. The third question is this one. As I mentioned before, can my ex-spouse really honestly get a Social Security benefit from my record? I mean, I cannot. Whether you can stand them or not. I like to put this in a fun term, which is what we've seen, and we would get calls on this. We've got calls on this from people on our radio show and back in the day, which was that your ex-spouse is applying for a Social Security benefit based on your work record. And you say, what? I heard that my ex-spouse told me that they're, going to apply for a benefit. They reached age 62, and I haven't seen him or her for 10 years and blah, blah, blah.
Well, you would probably, at that point, never know that they were applying for a benefit on
Well,
your work
as
record.
I said, they'd have to tell you.
Yeah.
But they call you and they
throw
say,
it in your face.
yeah, hey, guess what? You know what? I'm getting, $1,500 a month off your work record. So,
Oh, and then that person says, well, then I'm cutting my family support, not my family support, but my alimony from back then.
yeah.
But yes, a divorced spouse with a eligible marriage, a marriage that lasted for at least 10 years, and the divorce was more than 2 years ago. If the spousal benefit is greater than their own, they're eligible to apply for a spousal benefit from that divorced worker's work record.
Yeah.
So, and from the divorced worker standpoint, it doesn't have any impact on them. It doesn't, they wouldn't even know about it. It doesn't affect if that divorced worker got a new spouse. It doesn't affect their potential spouse's benefit. If they had kids from the second marriage later in life and they're retired, and it doesn't affect what their kids from this marriage will get, or the kids from the previous marriage if they're under 18, or the first marriage. I mean, it doesn't have any impact on the work record or the benefits being paid to the current family of the work record holder. But there's no way to stop it either. The divorced spouse, if the spousal benefit is greater than their own, is eligible for that benefit. Nothing you can do about it.
The call we had,
I remember that call.
was a guy who had been married. He was
10 years.
Yeah, it was at least it was 10 or 11 years. It was about 11, 12 years, something like that. And they had gotten divorced
And
around
it was a
age.
nasty divorce, it sounded like.
It was, and I think they gotten divorced around age 52, 53. And they're both now in their 60s, 62, 63. It'd been like 10 years, but they've been married the right time. And this person had heard, he said, well, I can't stand
I don't want her getting a dime from me.
I'm getting, $2,000 a month or something like that, and I hear that she's
eligible for $1,000 a month.
And let me tell you something else. I remember he said she never worked a day in her life, and she married this other, she hasn't worked at all.
There, you bring up to be able to get a benefit from an ex-spouse. You can't be remarried.
Well, that's why I stopped. This person was not remarried, but the resentment was that I did all the work and she did nothing. That's what this guy said. And anyway, that was the scenario. And
she shouldn't be eligible for anything from my work record. We cut everything off.
Right. And I think what this individual was concerned about was that his benefit of $2,000 a month, whatever it was going to be affected, reduced, or something.
He didn't care, but we talked to him about that. I remember this call.
Yeah.
And we said, it doesn't affect you at all. It doesn't affect your current spouse at all. It has no impact on you whatsoever. You won't even know. You wouldn't even know. You don't have to know.
Right.
And it still bothered him that something was being paid to her based on his work record because it was all his work.
It was pure revenge.
Oh man,
I'll never forget that. That was
one of the more bitter people I've ever talked to.
Oh, it was. It was, gosh,
and it was like
13, 14
tough.
years ago.
Can't do anything about it.
You can't do anything about it. And he was not real happy with the answer. He asked about things like, well, okay, go to court. You see, because here's the thing. When you have like pension benefits, and
they can be split. Those are if I have to give part of it to an ex-spouse, that cuts what I get.
Yeah.
That affects what I get because the pension benefit is what it is.
Yes.
And to split it means really splitting it. But the spousal benefit doesn't come from out of your pocket in any way, shape, or form.
No,
and it comes out of all of our pockets.
Well, no, it doesn't. It doesn't come. Doesn't.
It comes out of the trust fund.
Why do you do that to me?
But no, it won't.
No, it won't. It doesn't affect it at all. And it cannot be negotiated in any divorce settlement. You cannot say, well, you have to pay them another, $1,000 a month of your Social Security benefits. No,
and if it is being paid, an ex-spouse is getting a benefit from your work record, and you have a current spouse and you have current kids, that are all getting benefits. The benefits that's paid to the ex-spouse is not part of the family maximum.
No, well, it shouldn't be. They're not part of the family.
Yeah, but it is being paid as an ex-spousal benefit.
Yeah.
So that you can get it, and that's something. And when we see people looking to retire, especially single people, who are looking, that are looking to retire, one of the first questions I'll ask is, were you ever married?
Yeah, because it matters.
How did that end? Because there's a difference in how it ended, whether it was death or divorce. It'd be into what you're eligible for.
Now, you have to have been married for 10
years.
consecutive years, right?
Yes.
It cannot be, the Elizabeth Taylor. Here's a really dated reference, but married to Richard Burton for 4 years, and then divorced for 2, and then another 6 years. It doesn't have to be.
It's pretty much. I mean, there are some very, very obscure, continuous things that could happen, but it's basically it's got to be 10 years continuous.
Okay.
And unless you're already receiving a benefit, a spousal benefit, you have to be divorced for 2 years to be eligible for an ex-spousal benefit.
Oh, that's right. I forgot about that. That's right. You can't
get divorced in contemplation of getting a benefit. So you're coming up on 62.
Well, you can, but you got to wait at least 2 years. Yeah.
You're coming up on 62 saying, well, the higher wage earner doesn't want to quit, and he doesn't want to take their benefit until later, or I want to wait until age 70 to take mine, but I'd love for my spouse to be able to get a spousal benefit at age 62.
So how about this, sweetheart?
So let's get divorced so you can start getting a benefit now. It's 2 years, 2 year wait time.
Can't even imagine the conversation you would have with hey, honey, I got a great idea.
It's an extra $1,000 a month for you.
Check this out. Now it involves us getting divorced. Okay. But anyway, look.
But only on legal paper, not in the church. Yeah.
And we can get remarried, maybe eventually.
Yeah, once we get to full retirement age.
Yeah, then it's fine. It's fine. What do we care? Why are you getting ready to slap me like that? What's wrong with you?
If you bring up that kind of thing, you're probably used to why she's getting ready to slap you.
Well, that may be, and maybe you don't, have, I don't know.
Deservedly so, too.
So the answers to each of these questions were, we started at the top of this podcast, can I work and still collect a Social Security benefit? Well, the answer is yes, if you are over the age of full retirement age.
Or you make less than the threshold.
Or you may, and the threshold is one level for if you're under full retirement age for the entire year. If you reach full retirement age, the year you reach full retirement age, you can make a little more.
It's $21,240 for this year.
$21,240 of adjusted gross income.
Yes. It's a magi, but yes.
All right.
It's basically your Social Security. If you have a W-2, if you've ever actually looked at your W-2 that you get for your tax filing, there's 6 boxes. The first box is your taxable wages, and then taxes withheld. Then it's Medicare or Social Security wages. Box 3 is Social Security wages, and then the Social Security tax withheld, Medicare wages, Medicare taxes withheld. That number 3 box, that's the kicker. What are your FICA wages?
And that's what's going to determine
it.
So, and if you turn full retirement age,
any month during the year,
any month during the calendar year, how much can you make then? 50.
51,520.
All right, so it goes up quite a bit.
Now, people will say, "Well, wait a minute. What if I want to?" Going back to the very first question.
Oh, I know what this is. Yeah.
What if I retire in June? I mean, I was making pretty good money. I'm making $200,000 a year. I made $100,000. January through June. I'm going to retire July 1st. Does that mean I can't get my Social Security benefit starting in July?
Because by the time I'm
way over the base.
Right. But I was working and I'm not collecting, but now I'm collecting in June.
Yeah, or July, or whatever month. And there's a 1 year. Normally, it's an annual test. They just look at it on an annual basis. What'd you make in an annual test? But you have a chance to do it one time where you do it on a monthly test, and they take the annual limit divided by 12, and as long as you don't make more than that in the months where you're receiving your benefit. So I retired in June, start receiving my benefit in July. I'm not getting any wages in July. As long as I don't exceed 1/12 of the annual amount in any of those remaining months for the year, I don't have any retirement earnings test. I'm not actually working. But
don't worry about it.
But that's only one time. And then if you say, well, then hey, I can do this. I'll work 6 months next year, and it doesn't. Now it's an annual test again.
Yeah, you can't get around it. No one's going to do.
And
that.
they're not. And this is those last 6. In my example, you were going to get Social Security for the last 6 months and not work the last 6 months. But you decide to do one more job, and you get paid for 1 month in those 6 months that you're receiving your Social Security. It doesn't add up to half of the threshold, but you exceed the monthly threshold.
Mm-hmm.
Well, you're done. You're out.
Then wait. If you're going to work an extra, just wait till you're done working. It makes it so much easier. So, can I work and still collect a Social Security benefit? Yes.
If you don't make much,
No but.
Yeah.
That's it.
If you're full retirement age or older.
Can my kids collect a benefit? Potentially, yes.
Yeah, if you're receiving a benefit.
This is what we answered today. And then can my ex-spouse really get a Social Security benefit from my work record?
If it's more than what their own is.
There is a chance, yes, but don't worry about it.
It doesn't affect you at all.
Try not to think about the fact that they're
come on,
sponging off you still.
They're not.
They're not. I'm going back to that caller we had, who I think actually used those words. Good stuff. Good stuff. If you have any questions on this, we don't talk about Social Security a lot,
but it does basically form the foundation of your retirement income. And
well,
so you have to
yeah.
know how to deal with taking the choices and what you're getting for that, to determine how much then you need to supplement that with your portfolio income to meet your needs.
Yeah, a good strategy will start with your guaranteed income, your foundation, your Social Security, your pensions, your
how much,
any
when.
Guaranteed income you have coming in.
Yeah, and then it go to your expenses and say, okay, what's my shortfall? And are there any dramatic changes to your spending happening? Is your mortgage going to be paid off in the next 8-10 years, and your spending need comes down a little bit, or maybe a lot, depending upon the size house you have?
Well, I want to talk maybe next week, if I can remember to do this next week, about guaranteed income and creating sources of guaranteed income and why guaranteed income in retirement is important. And this goes back to our whole buckets discussion.
It does.
And it's part and parcel of a buckets discussion, a bucket strategy.
And it has a lot to do with the emotional side of investing, not just the scientific financial.
Boy, doesn't
numbers.
it? Whew, man. All right. If you need more information, you can go to luciacap.com, LUCIACAP.com. You can find all this stuff there and more videos and blog posts and just about all the information you need. You can also get in touch with Professor Rick Plum or any of the Lucia Capital Group advisors who can help you out with this Social Security strategy. It is part of your plan, and it should be. 800-644-1150. The number at Lucia Capital Group, 800-644-1150. Give them a call. They do this stuff every single day. They'll be happy to help you out as well. Spotify, we said, is our podcast. You can go to Spotify. You can go to Apple. iTunes, I guess it is. Subscribe to it. Get it downloaded to your device every single week. Do not miss a single episode because you miss a lot, as we proved once again today. Would love to have you as a subscriber. And, of course, if you have any questions, you can go to our website, luciacap.com, and ask us a question, and we should be able to answer it right here on this program. Out of time. Professor, thank you so much.
Always welcome.
As always, we appreciate you being here. For Professor Rick Plum, Certified Financial Planner, CFP Professional, I'm your podcast host, Johnny Dean. Thanks so much for joining us. We'll talk to you again next week.
The information provided should not be considered specific tax, legal, or investment advice and is not specific to any individual's personal circumstances. To the extent that this material contains tax matters, it is not intended or written to be used and cannot be used by a taxpayer for the purpose of avoiding penalties that may be imposed by law. Each taxpayer should seek independent advice from a tax professional based on his or her individual circumstances. Different types of investments and/or investment strategies involve varying levels of risk, and there can be no assurance that any specific investment or investment strategy will be profitable for a client's or prospective client's portfolio. Thus, investments may result in a loss of principal. Accordingly, no client or prospective client should assume that the information presented serves as the receipt of or a substitute for personalized advice from Lucia Capital Group or from any other investment professional. You should always seek counsel of the appropriate advisor prior to making any investment decision. All investments are subject to risk, including the loss of principal. This material was gathered from sources believed to be reliable. However, its accuracy cannot be guaranteed. The information provided is based on current laws, which are subject to change at any time. Lucia Capital Group is not affiliated with or endorsed by the Social Security Administration or any government agency. Social Security rules can be complex. For more information about Social Security benefits, visit the SSA website at ssa.gov or call 800-772-1213 to speak with an SSA representative. Examples cited are hypothetical, are for illustrative purposes only, are not guaranteed, and subject to potential federal and state law amendments. There is no guarantee that you will achieve the results discussed or illustrated. IRA withdrawals will be taxed at ordinary income rates. Withdrawals prior to age 59.5 may also be subject to a 10% penalty tax. CDs are FDIC insured up to $250,000 per depositor per insured bank for each account ownership category. Rick Plum is a registered representative with, and security and advisory services offered through LPL Financial, a registered investment advisor, and member FINRA SIPC. The investment professionals are affiliated with LPL Financial and are conducting business using the name Lucia Capital Group, a separate entity from LPL Financial.